Yes students, in this video I am going to discuss what is ratio analysis. Ratio analysis, as I told you, analysis means deep study. So ratio analysis is the study of relationship among various financial factors. Keep it in mind, only financial factors in a business. This definition is given by Myers. Okay. So again I am repeating. Ratio analysis is a study of relationship among various financial factors in a business. It means non-financial factors which cannot be termed in money. They cannot be included in ratio also. It can also become its limitation. So in short, we can say that it is a technique of analyzing the financial statement. Trading and P&L just we have, and we just analyze that trading and P&L and balance sheet by computing ratios. So what are the objectives to calculate ratio? If we know the net profit, then what is the need to calculate all that ratios? Because it simplify the accounting information. First reason is ratio just simplify and make the understandable the financial data. Determine liquidity of the business. Liquidity means how much cash is available to the business. Whether it is in situation to paying its expenses regularly or not. That shows liquidity. Assess operating efficiency. Ratio also determine whether company is, through financial statement we just get net profit. But we can't say whether this net profit is sufficient or not. This net profit is accurate or not. So this can be analyzed by net profit ratio. How much net profit we are gaining in comparison to our sale. It is of 25%, 35%. So ratio tells us that percentage. So that's why it helps in operating efficiency. Fourth one is analysis of profitability. Ratio also tells us what is the profitability of the business, as I told you earlier. And the last one, ratio helps in comparative analysis. Comparison can be made by inter-firm as well as intra-firm. Means company can compare its data with other firms plus with the other departments also. So what are the advantages? The advantages are quite same like objectives, but two more advantages are there. The first one is useful in forecasting. Through ratio we can predict the future. We can estimate if we have proper cash, then we can invest it somewhere. If we have lack of cash, then we can arrange the cash. So in this way we can forecast. And the next one is useful in locating weak areas. If net profit percentage is low, then we can analyze what are the reasons of less net profit. So in this way, through ratio we can estimate the weak areas of the business. We can locate the weak areas of the business. So what are the limitations of ratio analysis? The first limitation is sometimes it gives false result. Why? As I told you, in financial statement, if your financial statement is not accurate, then definitely ratios will not accurate, because ratios are completely based on financial statement. So it must be essential that your financial statement must be correct so that ratio can be correct. Otherwise ratio will give false result. Next we have qualitative factors ignored. As I told you, it analyze only financial factors, means the terms which cannot be measured in terms of money, that are not included in ratio, like the importance of human being, the value of an efficient manager. That factors are ignored in ratio analysis. Next, lack of standard ratio. For example, if just calculate ratio 25% of net profit is of sale, then how can we say that this 25% is perfect or not? So we don't have any standard ratio through which we can compare whether this ratio is accurate or not. Next is price level changes not considered. As we know, we are living in the age of inflation. So on the daily basis, there are a lot of changes in prices of the things. So price level changes are not considered in ratio analysis. That is the biggest disadvantage of ratio analysis. Window dressing. We can also, window dressing means we can make false representation also. We can personally bias. We can change the ratio also through closing stock less determined, the goods which are in the transit that are not considered, purchase will be shown at less price, closing stock provision will be made higher, provision for depreciation will be made higher or lower. So in this way we can change our ratio and change our financial statement also. That's why window dressing can be happen. Window dressing means change the data according to your use. So personal bias is there. Classification or types of accounting ratio. We will discuss in this chapter 4 types of ratio. First is liquidity ratio. Second one is solvency ratio. Third one is activity or turnover ratio. And the last one is profitability ratios. We will discuss these ratios one by one. So in next video, I am going to start our first ratio, what is liquidity ratio and how it is computed. Thank you.